Welcome to the US Stock Q&A show. You ask, I answer. I'd like to ask Bao Ge about his logic for selecting potential stocks. First of all, the most important thing about potential stocks is the sector they're in. For example, AI, clean energy, and biotechnology. These sectors are expanding rapidly. Even if a company is only the second best in its sector, it still has a lot of room to grow. So the first iron rule is this. Don't pick the stars in declining sectors, only choose the dark horses in growth sectors. Next, look at business growth. Potential stocks aren't about hype, they need to be backed by data. I look at revenue growth, changes in gross margin, and user growth. Simply put, it's about whether the company can improve year after year. More profitable and more efficient. If a company's revenue growth rate can stay above 20% to 30%, that's a sign of a potential stock. Furthermore, we need to look at competitive advantages. Potential stocks must have some form of moat, which could be a technological barrier, like Nvidia's GPUs. It could also be about the business model, such as Tesla's direct sales combined with its software ecosystem. In short, either its competitors don't exist or they're still in their infancy. Lastly, we need to look at the attitude of capital and institutions. Whether there are people hyping it up and driving the momentum is extremely important. You need to look at which institutions, funds, hedge funds, or top VCs are backing a stock. Their moves are the weather vane for potential stocks. If top institutions are making big bets, you can consider following along. So, how do you check the latest holdings of these institutions? In Abao's US Stock Roundtable, there's a free bot that can fully track the latest holdings of major institutions. I'd like to ask Bao Ge, for investors who have traded stocks for many years, how should they get started with options? That's a great question. I know there are many friends who have been working hard in the stock market for many years and now want to try something more advanced and flexible. So the very first step is to understand the most basic knowledge about options. You can find my beginner option strategy videos on my homepage. These will quickly help you understand the 4 most basic option strategies. For more advanced ways to play with options, you can check out the first season of my US Stock Live Trading Challenge series, which spans 11 weeks. Throughout those 11 weeks, I showcased a variety of approaches to let everyone experience the allure of options, as well as the risks involved. But no matter how many instructional videos you watch, nothing is as effective as real trading experience. Practice is always the best teacher. However, please always remember my advice. Use small positions when trading options. I'll teach you a position management method that anyone can use. It's called the mortal cultivation method. Use 97% of your total assets for stocks and 3% for options. What's the benefit of this? If that 3% grows significantly, it could even surpass the 97%, and if you lose the 3%, it won't hurt your foundation at all. Just take another 3% and start over. Through this kind of iteration, you keep optimizing your trading system. Until one day, when you can consistently make that 3% outperform the 97%, that's when you've truly achieved success. You can start to trust and refine your own trading system. Bao Ge, I want to ask you, when you first started trading, how did you overcome emotional trading? Every time I place a trade and lose, I just don't know if what I'm doing is right. In this market, what we most need to overcome is our own emotions. Emotional trading is a pitfall that no one can avoid, so my suggestion is, first, make a trading plan in advance. Set your strategy, entry and exit points, take profit and stop loss levels ahead of time. After that, become a ruthless trading machine. Just execute your previous plan without making any extra emotional judgments. After placing your trades, don't stare at the screen too much. The longer you watch, the more likely you are to act on impulse. The second point is to review your trades every week. Record all your trades for the week, including your buying logic, stop loss levels, expected targets, and final results. Whether you ended up losing or making money, you must review and repeatedly check whether each of your actions was reasonable. It's not just about whether you made money or not. Many people use flawed trading logic and only get good results because of luck. But if you really consider such a decision to be correct, it can lead to big problems down the line. The purpose of reviewing your trades is precisely to correct these kinds of mistakes. Remember, the outcome of trading isn't determined by a single trade, but by the average result of thousands upon thousands of trades. You can win, you can lose. When you win, try to win more, and when you lose, try to lose less. If you look at hedge funds on Wall Street, you'll see that most of their strategies have a win rate of just around 55%, up to 60%. When they make money, they make a bit each time. When they lose less. You can view this from a statistical big data perspective, treating it as a repeated game. Suppose your profit probability is 55%, and each profit gains 1.5%, while your loss probability is 45%. Each time you lose 1%. Over a long period, if you keep repeating this game, you'll find that your overall return rate will gradually reach a very impressive number. This is what positive expected value trading is. Bro Bao, I heard that blockchain has been listed on the US stock market. Is it now possible to trade US stocks on cryptocurrency exchanges? That's big news. Stocks like Nvidia, Apple, and Tesla now have their own tokens, and you can trade US stocks in a decentralized way on the blockchain. Personally, I'm very optimistic about this trend because it means that global capital can invest in US stocks through the blockchain. Have you ever worried about not being able to open a US stock account? Don't worry, because now you can trade US stocks on cryptocurrency exchanges. All you need is your ID card to open a BitGet account online to trade US stocks. You don't even need to go to Hong Kong. BitGet, this well-established cryptocurrency trading platform, has launched spot trading for over 100 stocks, including Tesla, Nvidia, Apple, Amazon, Google, Meta, and more. And there are also contracts for 25 stocks, covering basically all the popular stocks. BitGet's US stock trading offers two modes, spot and contracts. Here, let me explain a bit. Spot trading means you use USDT to buy these US stocks, which is equivalent to buying the actual shares. BitGet's spot trading fees are very low, less than 0.06%, even lower than the fees charged by many US stockbrokers. As for contracts, you can choose a leverage multiplier to go long or short. BitGet currently offers the highest leverage among all exchanges, with up to 25 times leverage on contracts. Let me give you an example to make this clear. Suppose you open a 25 times leveraged long contract on Nvidia. That means you're essentially using 25 times leverage to go long on Nvidia stock. If Nvidia goes up by 1%, you make a 25% profit. Conversely, if Nvidia drops by 1%, you lose 25%. In my opinion, contracts are a double-edged sword. Used well, they can amplify your gains, but if not, they can also magnify your losses. If you're a beginner, it's better to stick to spot trading and use contracts cautiously. Contracts are more suitable for professional investors. Let me give you a demonstration here. I've opened the NVDAUSDT contract for Nvidia, and I can freely adjust the leverage to any level I want. Then I can choose to go long or short here at the bottom. If you click on the contract list in the upper left corner, you'll see that besides Nvidia, you can also choose Tesla, Apple, Google, and so on. Here, I'll click on Tesla, and it switches to the Tesla contract. I've put the BitGet registration link in the comments. When you register, enter ABAO's invitation code, and you'll get a lifetime 40% rebate. That means a 40% discount on transaction fees. Boss Wang's mentality couldn't handle the wild ups and downs of the stocks and ended up completely overwhelmed. On one hand, you start doubting yourself and can't hold your stocks. On the other, you keep fantasizing about the best way to make money. So what should you do? If you can't hold anything or end up panic selling at a loss, at the root, it's because your position size is too large, beyond what you can handle. Say the maximum daily fluctuation you can handle is 3%, but the volatility of a stock is 9%. Then you should only use 1/3 of your position to trade this stock. That way, your expected fluctuation is within 3%, which is within your psychological comfort zone. I'm not talking about the fan who submitted this question specifically, but Abao has noticed that there are always a few gamblers who go all in on expiring options. Then they come running over and say the volatility is too high, they can't handle it. What should they do? Remember, gamblers always end up with nothing in the end. If you really want to try, it's simple. Use money that you can afford to lose to buy expiring options. Even if you fail in the end, it won't hurt you financially. At the same time, you can also make relatively rational decisions. Baoge is incredibly charming. How do you view Opendoor? Everyone says this company is a meme stock, but Jane Street holds 5.9% of the total shares, and the new CEO's equity incentives are unlocked incrementally as the stock price rises from 9 to 33 yuan. Does this mean that 9 yuan will be a fundamental support level? 33 yuan is a level within reach. When Abao first mentioned in the group that it was a dark horse, the stock price was only 2 yuan. Now it's already 9 yuan per share. I think Opendoor is one of the most promising main stocks right now. Although it has a lot of potential, isn't a target price of 33 yuan a bit too exaggerated? Maybe it could reach that point someday in the future, but for now it's just wishful thinking. As the #1 in the universe and a top Nvidia bull, what does Abao think about Nvidia's upcoming trend? Over the past month, Nvidia has been fluctuating between 165 and 183. Abao's latest view is that this consolidation will continue, and Nvidia is likely to keep moving sideways for now. It keeps moving up and down within a range, so I think the most suitable strategy is to short volatility. If you're trading the underlying stock and can't use option strategies to short volatility, then the best approach is to buy at the lows and sell at the highs within the consolidation range. Trade the swings. Right now, the overall market is at a historical high. In my opinion, 185 is Nvidia's all-time high for the near term, and it won't be broken anytime soon. The stock will continue to fluctuate. Do you all remember how Nvidia traded sideways between 120 and 147 for an entire year in 2024? Back then, 147 was Nvidia's all-time high for the year. I think that today's 185 can be compared to that 147. It's the upper edge, the ceiling of the current trading range for this period, and it's firmly set for now. Baogate, what do you think about this recent internal financing event involving Nvidia, Oracle, and OpenAI? Here's the logic. Nvidia has money and cash on hand and wants to invest. Not only have they invested in OpenAI, but also in Intel. Meanwhile, OpenAI lacks both funds and chips. They want to buy Nvidia's chips and also need financing. So naturally, it's a perfect match for both sides. OpenAI sells part of its equity to Nvidia, making them stakeholders with shared interests. Nvidia invests $100 billion in OpenAI, and how OpenAI uses this $100 billion is an internal company decision. However, in my opinion, a large portion will definitely be used as capital expenditure. That is, capital expenditure, which will be used to purchase Nvidia's chips. Once you understand the cause and effect, this is clearly a mutually beneficial and win-win cooperation. It's a good thing for both Nvidia and OpenAI in the long run, but Oracle doesn't really have much to do with the two of them. Oracle is simply increasing its spending to invest in AI. This has given investors confidence, causing Oracle's own stock price to rise. On the other hand, Oracle's spending is Nvidia's revenue, which is a long-term positive for Nvidia's performance. Suppose the US stock market experiences a significant correction in the next month or two. What are some high-yield yet relatively safe bottom fishing strategies? So first of all, you need to make sure you don't have any idle cash on hand. Everyone understands this principle. If you want to join others in seizing the golden opportunity at the bottom, you first need to qualify to participate. Therefore, the first step in bottom fishing is that any cash currently sitting idle in your portfolio can be placed in treasury bond ETFs to earn some interest. The annualized interest rate is about 4%. The second step is to patiently wait for a bottom signal to appear. So, when is the bottom? If a bottom signal appears, I will make a dedicated video to let you know, so be sure to follow me. The third step, after the bottom signal appears, is to buy at the bottom. The safest and most profitable bottom fishing strategy is definitely to buy the actual stock. Buying at the lowest point is both safe and yields high returns. What is the most effective take-profit strategy that Brother Bao has used? My favorite and most commonly used take-profit method is the wheel strategy in options, and its logic is especially simple. The wheel strategy has 3 steps in total, cycling continuously like a wheel. Step 1, sell cash-secured put options. What does this mean? It means you pick a good company that you're willing to hold for the long term, sell a put option at a low price, and prepare the cash. If the stock price drops to the strike price, you'll be assigned to buy the stock. This way, your purchase price is lower than the market price, and you also receive a premium upfront. The second step, after you get the stock, sell a covered call option. Whether the stock hasn't dropped or it has dropped and you bought the stock, you can use the shares you hold to sell a call option, which allows you to collect another premium. Once the stock price rises to the strike price, your shares will be called away and sold. But you still make a profit on the sale, plus you receive the option premium. The third step, after your shares are sold, start selling cash-secured put options again. The essence of this strategy is first to earn option premiums, which is like a steady stream of rental income. Second, you buy stocks when prices are low, so you don't have to worry about being stuck with losses. Because you originally wanted to own this stock and sell it when the price is high, you don't have to worry about selling at the wrong time, since the option premium plus the stock's price increase provide a safety net. So essentially, the wheel strategy is a combination of picking up bargains with one hand and collecting rent with the other. It helps you lock in profits and control risk at the same time. Bao, when you trade, what do you enjoy the most? That's a very good question. If you had asked me this 5 years ago, I would have said I enjoyed the thrill of making money. But if you ask me now, I would say I enjoy freedom. From the moment we graduate from school, most of our lives seem to become an endless postponement of waiting until I have money. Our time is given a price, our freedom is divided up, and we gradually lose the dreams we once had. We get up early to squeeze onto the subway and clock in, selling our best energy to the company. We switch to a different bank card to get our salary. After work, we drag ourselves home, eat takeout, and watch short videos. We see people at Sairam Lake, the place everyone says you must visit, saying, "I miss you at Sairam Lake." We watch them riding horses on the Pamir Plateau in southern Xinjiang. Looking up, we see the snow-capped peak of Mustar Ata by the shores of Kanas Lake in northern Xinjiang. Riding freely along the river, gazing into the distance at the silver-crowned Altai Mountains, I don't want anyone else to be free on my behalf. I am the only one who should take charge of my own life.